Good morning, guys. Welcome to this Monday, May 12th. And oh boy, do we have a pop in the market, right? I know, but I thought it gapped up pretty good on at the open, but then we had this announcement, the China trade talk announcement. Oh man, that market took off to the upside. The Nasdaq is almost up to 1,900 points or something. This is nuts. So the market is really moving this morning to the upside. Gold is down, oil is popping. The demand for oil is expected to increase. So overall, I had to say it was a pretty darn busy weekend. So the market popped to the upside. Let me start taking a look at the news first before we keep going here. But this is what a heck of a start of the week. I will take that anytime, right? So looking at the news this morning. Really nothing. Treasury statement at 2. So no real news to drive the market this morning. Tuesday we get the CPI number. Wednesday we get PPI gets on Thursday. So CPI on Tuesday. Not much on Wednesday. On Thursday we get PPI, retail sales, Philly Fed, a ton of stuff coming out on Thursday. And on Friday, we get housing starts, import-export prices, and so on and so forth. So I think Thursday, Friday, we have news. Tuesday, we get CPI. But to start off the week, I mean, what a start of the week. Can't complain. So we were down here. And looking at this size chart, you had your start on the F1 to see what the perspective is. We done, excuse me, we were up here in this distribution. We had this Thursday rally. Thursday looked like they had a pretty good move to the upside. And then Friday, they knocked it down. And then you had a kind of a range-bound day on Friday. But not much to, excuse me, and not much to drive the markets. Damn. Excuse me. So Friday, kind of a holding pattern, kind of a day, and then we gapped up at the open. I thought it was primarily because the Russia talks, they had a breakthrough there. They're going to sit down, Zelensky and Putin's going to sit down face to face in Turkey, I believe. And so we had some progress on that side. And then, of course, there was the executive order on pharmaceutical and drug prices. There were a few different announcements. I thought, okay, fine, gap up. It's a good sign. But then at the London Open, when they announced the China trade deal, well, not the China trade deal, they only agreed to drop the tariffs down. That's what they did. So they dropped the tariffs down to the escalatory part down. So I think it was like 30% on the tariff, 30% tariffs on China now, but that drop was pretty substantial, and it's a 90-day period, so they can discuss further trade, I guess, and that set the market on fire because that resumes trade with China again. So before that, there was no trade going on at all. There was a total dead stop, and now the trade can begin, even if it's tariffs on it, tariffs on it, on the goods. It's not going to be totally shutting down the trade between the countries. So that's how we get started. Massive move to the upside. We are up here against these upper areas, right up against this congestion area between 58.50 and the 59 level. They can take this out, get up above 5,900. We're going to be back in action. This is a pretty significant retracement on this whole distribution. So remember, we had the hardest time getting through this area, the 55 to 55.60s. That's where they really had a hard time getting up. Then we were in this area for a bit, building value, very much in the holding pattern, climbing that wall of worries. And now we're finally taking off to the upside on news. And this is all good news. This is and everything which happened on the weekend, potential progress in the Ukraine-Russia situation. The China thing is huge. And we have a shot at potentially taking out this high and potentially going higher. So we'll see. But at this point, we're going to start off on the long side of the market. Could you guess that? Yep, we're starting off from the long side. Volume is up, a fair amount of volume, volatility is up. So you had to kind of pay attention. 340,000 contracts traded on the ES. It's like twice or maybe three times the normal volume. So it's going to be a reasonably volatile day, and but it is to the upside. So I'm going to be looking to buy weakness all the way down here to that 58.15 level. So early on, we're going to buy weakness. At this point, I took out this guy already, 58.40s, 58.15s. I don't have a, I didn't have, there was a ton of levels in between here before. I didn't take a lot of them out because it's, well, I took a lot of them out because it's, when it ran through levels like this, just blow through all of them. They cannot take him out, and it's hard to say which one is going to be valid or not. So I guess they minimize the amount of levels I'm looking at right now. So resistance at 58.60, 65, fine. And resistance at 58.50. Those are two probably valid areas of resistance. But if you look at the capital flow, we're getting into this whole congestion area. So that could be nice short setups. So I would not be too scared of potentially putting on short setups up here until they bust through the 5900s. So they start taking out 5900s. Yeah, stay on the long side in a big way. But right now we are up at the congestion area. You can see the market run out of gas for a little bit, and and doesn't mean they're going to stay there. So two things can happen. We can either see them extend to the upside, or we can see the day session start retracing this past the 58.15. So they start taking out that 58.15. So I would look for a potential short trade. See if they can have far of this single print gap they can close down to the higher that little gap up. You see they gapped up from, they closed way down here at the 56.80s. They gapped up above the 57.40s and started trading higher above that. So they were holding on pretty good. And this was, I thought, pretty much the Russia trade talks, the pharmaceutical announcement, and so on and so forth. So there was some good news there, but there was nothing about China yet. And then at the London Open, man, right at 3 o'clock there, the 3 a.m., the China announcement came out, and boom, one big shot to the upside, and that's where we've been staying ever since. So from 58.60 to right now trading at 58.60. So we are like 200 points up on the ES. That's pretty freaking spectacular. So I would stay on the long side of this, definitely trade from the long side of the market. So looking to buy weakness, 58.40s, 58.15s. If this take out that 58.15s, I would look for more retracement. I'm not going to necessarily hold out for that too long, but if they start way down here, definitely could be a short trading here to see how far they can take it. So when they have volatility like this, it's anyone's guess if they're going to try to retrace it. Could be a pure technical trading, retracing this down, or they could just stay here and start popping to the upside, in which case we are staying on the long side. But we do have a couple of areas of resistance above us. So that's 58.60s and the 58.80s. So these two are 75 to 80s and 65 here. So these two areas of resistance, they are definitely up there and worth looking at, because if either of them holds, we could see a nice rotation down from there. And it's volatile, so these bars are big again for the right reason. So 58 this bar right there is 58.47 to 30, 10-point bar sizes. So a pretty good move to the upside on the ES. And NASDAQ even worse. That thing is absolutely on fire. Yeah, excuse my voice. This is California going from 100-degree weather down to like 50-degree weather. This that's a number on you. Anyway, so we are to the upside, lean toward trade this on the long side of the market, look to buy weakness, and watch these upper areas. Both of them, 58.65 and 58.80 comes out. We are stay on the long side, and we're looking for a rally to the upside. But these are pretty good areas of resistance, and If they can't bust through it, we may see a retracement, at least some weakness. If not early weakness, like midday weakness, at least testing that 58.15 level. And I would look at that as a buying opportunity. And if they take that out, I would start thinking retracement to see how far they can retrace it. So it could be a short trade in there. Could be a short trade above here too, that from the 35 to 40s here down to the 15s. There's a fair amount of range in here. So, but I would primarily favor the long side of the market today, at least to get started. On the bonds and the NASDAQ. So the bond market is not moving a whole lot. That's a good sign. So rates are a little bit to the downside. Prices coming down. Prices are a little bit to the downside. Yields are popping up a little bit. And let me see, where's my capital flow on the bonds? So not much movement on the bond market. That's a good sign. So there's nothing spectacular in the financial market. This is just pure equity market reactions. So you can see we are trading a little bit lower here. Not going to worry too much about that. It's going to stay range bound until they take out that 112 or 113. So 112.16 to 113, this support area. That comes out. That's going to worry about the short trend at that point. But right now, just looking at maybe start a trade. Favor the short side, at least to get started, given the overnight. Look to sell strength against the 113.16s, 113.24s. And if they trade up above the 24s, I would just take off the short bias and go back range bound. So pretty straightforward trading on the bonds. But starting off on the short side, since they did push through that 13.25, 24.25 support area, they run 14s as well. So these two support areas were pretty good, but they took them out, and now see how far they can take it on the downside. But not by any means a big move to the downside on bonds, at least not yet. The NASDAQ, and that is freaking on fire. Look at that thing go. They are up here against areas of, they're pretty much taking out this congestion area. You know, this is the ES is up, bouncing up against theirs. This 2800 area, the ES blew through that thing. So they are past it, and they're up here in the levels where it's a pretty good area right here. If you look at the, it's a pretty good area of resistance against that 2800. It was support on the way down here for quite a while, and until they finally blew through it. And so this area, the fact that they are pretty much taken it out, is a very good sign. Close attractors can be the 21-200s, but we have some a little bit of going back and forth there, but definitely it's in a spot where we can take this higher. So they can hold on to this. We are still technically in the area, but they are right up here against these two ledges, and I mean, it's borderline. So I think they almost took it out. But if they run into resistance right here, I would not be surprised. You can see how this little distribution formed in the overnight. So I would start off from the long side, looking to buy against the 880s, the 20,775s for rotations back up. And on the way up, looking for shorts against the 940s, 980s up to the 21,000. So these three areas I would look for resistance. Look for resistance against, and see if they hold. We may have a shot at taking this back down and look and retest that 20,070-75. And at this point, they take out the 75 or 780s. I guess I was going to say 780s. If they take out that 780s, I would look for a potential move to the downside. So, and look at that retracement. That could be a pretty significant one at that. So we were way down here. So if they gapped up on and NASDAQ start trading higher, and this is the China announcement, big pop. So we can see a retracement all the way down here to that 600 level, to the London low. But, so there could be a beautiful short in there if that starts happening. So it just depends on how the market's going to digest this news. No shit, Mihail. Yeah, it's like if you haven't heard, this weekend and in the SoCal, we had heat record over 100 degrees for 2 days. So yeah, and now it's going to drop down like 30, 40 degrees today. So yeah, great. Anyway, so what is the 2770 to 80s? If they take that out, I would look for a retracement trade, maybe even run it all the way down here to that low. So that could be a beautiful, big shorts dynamic going on there if they start retracing it. And the same for the ES, that was 58.15, right? But if they hold support and you see a probe, but they hold and start trading back up, just stay on the long side. So I would favor the long side to get started, but that's a scenario it could develop that someone throws cold water on it or something happens or they start retracing this. But it could also be the start of a face ripping rally to the upside. So that would be they've been talking about it. They don't need much for that to start happening, and with the earnings coming out a little bit better than people thought, this could certainly set things off to the upside. So there we have it. ES and Nasdaq from the long side of the market. Watch these lower ledges. If they come out, look for a potential retracement trade. And then finally, oil and gold. Gold selling off. I would say that's a rotation out of gold into equities at this point. That's kind of what I would think. It's my capital flow on gold. Yeah, it's right there. And as you can see, we had this 3340s attractor. We are right back into this lower attractor, the 3240s again. And we're down here testing that ledge right there, low volume area at the 3200s. So it's 3210 more precisely. But if that comes out, look out below. We can get all the way down here into the 3000s at that point. So gold, it's right up against a pretty critical support area, and it's a low volume area. So far, they tested it a couple of times, it held, but now we have new information. So if people want to sell gold to rotate into equities, you'll see more pressure to the downside. So initially, I would trade from the short side, looking to sell strength against the 3240s. And if they start trading above the 3240s here, I would start thinking about the move to the upside. A retracement trade, you can see how the single prints just took it lower in a big way. 32.52, and probably the last one to look for a short setup against. But if they start retracing this, I would probably be more inclined to stay on the long side and see and just try to avoid selling into the or start buying into the 52s. I would look for a short trade up here, but if they start retracing, they can start to retrace right up here to the 32.70s. Yes, they can retrace quite a bit higher. So this whole move to the downside, if that China trade changes on us, then that dynamic changes throughout the day. That retracement trade could certainly be dynamic and be there. Initially, I would look for short against the 3240s. There could be something in between. The last one would be at the 32.52 for a short setup for rotations back down. And then looking to buy against support, the 32.20, 25s, the 15, 16s, and down to the 32.12s for rotations back up. I think these two areas, maybe down to that 3200s, could be valid. Probably the better ones are coming right here at the very low. But that is good support. So that could be that I would look for a long setup against those levels. And if it comes out, well, stay on the short side if that happens. So that's gold to get started. And oil, not completely surprisingly, that kind of sucked a little bit. But the fact that the demand for oil, I guess, is on the upside if China is going to be back in action. The economy is not going to totally tank. So that's why oil is trading higher, I would think, that the demand side of that equation is popping. And that's because of the China dynamic. And you can see it happened right at the same time. Now we're rolling to the next expiration on the 15th. So is that what, the Thursday something? So I think 15 was the last day on this expiration. But we are right back up here in this upper area again. So started moving a little bit. It didn't necessarily gap up on oil. It started trading higher. The real move started happening here at the 62 level. So if the Ukraine-Russia thing slows down and the China thing, the China deal holds, demand for oil is always going to be on the upside, and that's going to put pressure to the upside. I think this is short-lived, though. At this point, it is to the upside, so we should trade it on the long side at least to get started. So they're going to buy weakness, 63.20s, 62.80s, 62.30s down to the 62s for rotations back down, or back up, sorry, back up. For looking to buy weakness for rotations back up below that 62, look for a retracement trade back into this lower range again. So I'll take off the long bias if the trade below 62 again. But at that point, we are pretty much right back here to this attractor up here, this midpoint. And I would just say, fine, we're not taking it higher, probably going to stay in this around this 62 level at that point. So that's oil, start from the long side. So general dynamic on things here right now, gold from the short side, oil from the long side of the market, ES and NASDAQ traded from the long side of the market. And on the ES, we have the lower edge here is at the 58.15. On the NASDAQ, that is at 20,800, 775 to 800. If those lower edges come out, I would look for a retracement trade to the downside, but it's anyone's guess how the market's going to digest this when the day session kicks in. So it's I would start from the long side and look for continuation on the upside. And if that doesn't happen, that's when we can start considering that retracement or potentially even further retracement back below those key support areas. All right, so we'll leave it there. And finally, the throat cleared up a little bit here towards the end, so sorry for that. But anyway, good trading. And I will see you guys back at 11:30 for the next update. It's going to be one crazy day. I'm going to sit on the sidelines for a bit, I think, in the morning, and let's see how the dynamic is. If it's some follow-through feeling on it, or if it's going to be like a rip-roaring ripping rally to the upside, or what's happening here. Alrighty, guys. See you back at 11:30 for the next update later. Yeah, later.